Hello and welcome to Trading 5 Talents. In this video, I want to go over the last 10 trades that I made using the 10-2-7 Iron Condor strategy. So just to recap on what the strategy is, it's an Iron Condor strategy, and the short strikes are 10 deltas. The long strikes are 2 strikes further out of the money than the short strikes, and then all the options are 7 days until expiration. So that's why I come up with the name 10-2-7. And I'm entering every day on SPY because now that they have their daily expirations, we can run it more frequently, but I'm skipping all of these binary events. I'm just referring to them as the Big 5 Fed events. If you're wondering what those events are and how to find them, I do have a video that I made on that, so you can be able to find out when those events occur and whether or not you would like to trade on or around those days. With each of these condors, I am entering for approximately 30 cents in credit per Iron Condor, so that would be, $30. And then I'm exiting at one of 2 places. First of all, I'm going to exit in profit for 50% of the max profit, so that would be $15 or approximately $15, or I'm going to enter at a loss, and that's going to be 100% of the credit. So if I entered for 30 cents, I would exit at 60 cents, so that I would lose $30 on that setup. So this gives us the 2-to-1 risk to reward ratio, either lose 30 or make 15. Now, the first 10 trades that I made had a 70% win rate, and I'll put a link to that video up at the top so that you can see how those trades played out. But what you see here was the time frame of the first 10 trades. The red boxes are the losses, the green boxes are the wins, and then those 3 arrows were the binary events that I avoided. With a 2-to-1 risk to reward ratio, you have to win at least 2 of 3 trades in order to just break even. So that's 66%. So anything above 66% win rate, you would be profitable. So here we had a 70% win rate. I was profitable for this set, and so I wanted to just confirm it. That's why I'm doing the second video with the second 10 trades. So here we are with the time frame of this second set, and on the left you can see those dark green, dark red boxes. That was from the previous set of trades. Here we have 4 binary events that I want to avoid: the FOMC, Jay Powell, the Fed chairman speaking, CPI and PPI data coming out. So that's what I want to avoid. And as you can see right here, FOMC didn't do too much to the market. Neither did Powell's speech. CPI really didn't do too much, but you can notice the PPI really moved the market down quite a bit following that report. So here's the first trade that I made right here. And remember, the boxes represent the boundaries of the Iron Condor. Left is when I entered. The left bound of the box is when I entered. Right bound of the box is the expiration of the Iron Condor. The upper and lower bounds of these rectangles are the short strikes. So the green dot here is when I exited. So you can see SPY went down a little bit, and then it gapped up the next day. And during that gap up, I was able to close out that trade for 50% max profit. Here's a second trade. Same gap up is what allowed me to be profitable on this one. Third trade, I exited right there, approximately in the middle. We'll take a look at the actual numbers to see how long these trades were being held for. The next trade is right here, and I believe this is 5 in a row. So I was able to do 5 in a row without having to exit early because of the binary event. Well, I did exit right there at the green dot because I wanted to be out before the next day's events occurring. And so when I entered this trade here, I also exited the same time as the previous day's trade because, again, I wanted to be out at the end of the market and before the next day's event. So I took those small wins right there. Then I skipped. You can see that I didn't start my next Iron Condor until after that white arrow, and this one had a loss. And you could see it didn't even touch the short strike, but you could see how wide these strikes are, basically how tall this box is. And that's because there's a lot of volatility in the market with, coming off of the previous Fed event and then coming into Jay Powell's speech in this next Fed event. So there's a lot of volatility. I was able to spread my Iron Condor out pretty wide because of that, but also with the increased volatility and the movement upward, that stopped me out at my 100% max credit. So I took a loss on that one. So I entered another Iron Condor, but I wanted to exit before Jay Powell's speech. And as the market was coming back down, I was able to take a small profit there. I waited a few days because I didn't want to trade in between those two big events, the Jay Powell's speech as well as the CPI report. So I waited until after the CPI report to make my next trade. I was able to gain a small amount here, and then similarly with this next trade, I was able to gain a small amount there, but I'm exiting before the PPI report. So after waiting for the CPI report to be released, I entered this Iron Condor. I was able to make profit and exit about halfway halfway till expiration. Similarly here, I was able to exit after just a few days. I entered the final Iron Condor right here, but I had to exit pretty quickly because I wanted to be out before the PPI report, and I was able to make a very small gain right there. So that's, again, 10 trades. In this one, I lost one. So there was a 90% win rate here. All right, here's my data sheet for the 1027 Iron Condor strategy. You see the total profit was only $61, and I had an 80% win rate because the first set of 10 was a 70% win rate. The second set of 10 trades was a 90% win rate. So that's 80%. If I were to make $15 for all 80% of these wins and lose $30 for the 20% of the losses, then I would expect to make $120. But I didn't. I only made $61. And the reason is because you can see some of these small losses right here, $5 and $1, $2 and $5, $2, $2. So that isn't, $15, obviously. Now, the reason these profits are so low is because, as I have listed here in these notes, I'm exiting before certain events. So you can see this $5 and $1 exiting before the PPI report. This $2 and $5 exiting before FOMC. This $2 exiting before Jay Powell speaks. This $2 win exiting before the PPI report. So I'm not getting the full $15 from these trades because I am exiting early. So even though they technically are wins because I'm green, I'm in profit, the wins are smaller dollar amounts than what this is calculating. So that's just something to keep in mind when you see these numbers and you're wondering, why didn't I make $120? I only made half of that. Well, that's the reason why. All right, so my first 10 trades are listed right here. And then down here, these orange highlighted ones are the second set of 10 trades, the ones that I just went over in this video. So the average day I'm holding, let's see, let's start right here to right here. We can look down here. The average is 3.8 or 4 days. So let's just say 4 days. So I'm holding it for about half of the time that this trade is expected to be open. So if it's a 7 DTE, I'm holding it for about 4 days. Then yeah, it's about half. So that's good. So that gets rid of a lot of the assignment risk because I'm exiting early. I don't have to worry about the auto close feature on Robinhood. So that's also a good thing. That's why I'm going out these 7 days, and that's why I'm taking profits early so I can mitigate that risk. But otherwise, yeah, these are the numbers. You can see the strike range. These are very wide Iron Condors. With 10 deltas, these are pretty wide on the SPY. So it's got a very wide profit window. And that's what I like about this strategy. So let's go over and take a look at the conclusions for this Iron Condor strategy. So the conclusion for the 1027 Iron Condor strategy is that it does work. And I came to that conclusion after the first set of trades. And so I wanted to confirm it with this one. So the conclusion is the same. It works. However, there's still some concerns that I have. So let's see what works about this strategy. First of all, there's a wide profit range that we talked about. High chance of profit with only 10 delta strikes. So this is a very consistent win rate strategy. So it is an 80% win rate after 20 trades. And I know that isn't a large data set, but it still is pretty meaningful, especially when I'm skipping certain dates to trade. So that just increases that win rate. It has a relatively low risk to reward ratio, 2-to-1. And we lowered that by exiting at 50% max profit or 100% of the credit. So therefore, we're setting that sort of that stop limit order manually. And we're exiting early so that we can define our risks and define our profits a little bit more tightly than what is conventional on an Iron Condor. So there's no assignment risk because we're going 7 DTE and we're also exiting early. There's no auto close risk on Robinhood as well. We are avoiding the binary events, which makes these Iron Condor strategies a lot more profitable and a lot better in the long run. Now, my concerns are the same as they were after my first set of 10 trades. So this is what I want to work on for my next iteration, and that is, first of all, the fees. So you can see all I was making was about $15. That was the average profit. So that was $15, but that is per every iron condor, and these are 2-strike wide iron condors, so that's $200 in collateral. So for every $200, you're making $15, or every $100, you're making $7.50. So that is 7.5% ROI, and that's good. However, if you want to scale that up, you don't just want to make $15, you want to make, let's say, I don't know, $150, you're going to have to enter 10 iron condors. And when you do that, the fees are going to be very high because now you're entering, 10 iron condors, that's 40 contracts. So each condor has 4 legs and you're entering 10 of them. That would be 40 contracts. You're paying fees on 40 options contracts. That's going to be quite high, and that's really going to eat into a lot of your profits. So even though I'm not paying fees on Robinhood, I know other traders are using brokers that do charge these fees and commissions. So I'm trying to develop a strategy that can also be beneficial to other traders not on the Robinhood platform. So that's something I really want to work on, is the fees, not trying to get it out of trading iron condors necessarily, but just trying to be able to scale up without having as many fees. That's a really big concern that I need to work on. And the second concern is what happens in the event of a black swan event and you take that catastrophic max loss. Now, I threw up this chart in a previous video when I was comparing these iron condor strategies, and I listed this column here in red. So this is the max loss per $100 for these strategies. So if we just look at this last line down here, the 10-2-7 iteration. So this is a 2-strike wide iron condor. That means we're going to need $200 in collateral. So remember, the credit that we're receiving is $30. If this is we need $200 in collateral because it's 2 strikes wide. So $200 minus our $30 in credit, we could potentially have a max loss of $170. For every $200 that we're putting up as collateral. So for every $100, we just divide that by 2, our max loss per $100 is actually $85. Now, that max loss is if, this, iron condor, one leg, one side expired completely in the money, and then we would lose $85 for every $100. Now that is mitigated by us exiting early. However, if you can't exit early for whatever reason, let's say some black swan event happens overnight and the iron condor opens the next trading day completely in the money, now you're at a max loss. That's your catastrophic max loss. And that's very high, especially if you're trying to scale up this strategy. And let's say you're selling 10 iron condors. Now, 10 iron condors, you're hoping to make $150 based on what we went through in this video. But if you wake up the next morning and you're already at max loss, now you're losing $850. So that's why this was one of my big concerns. Not only the fees and the idea of scaling up, but also what happens in the event of a black swan event and then we lose all this money. So yeah, I am avoiding binary events. However, that doesn't take into consideration a black swan event, which, by definition are unknown, unpredictable. So those are the two concerns that have forced me to look at this iron condor strategy once again. And I think I found a pretty good solution to it. And so I'm going to be uploading another video hopefully soon to explain what that solution is and what that workaround is to address both of those issues at the same time. But overall, I think this iron condor strategy, the 10-2-7, is definitely the best one by far. It's not making the most money. You can see 750 compared to the 1210 or the 1183, but it is allowing us to exit early and not having to worry about assignment risk. So if you're willing to take on a little bit more risk, maybe the 10-3-7 might be what you're looking for because you can still exit early. The 10-1-7, I don't know. I didn't think that one was as good, but definitely the 1027 I think is a good one moving forward, but I still think there's some room for optimization in the fees as well as the max loss category. So if you enjoyed these types of videos, then please go ahead and click on the subscribe button and the thumbs up button. And if you have any questions about this, please leave a comment down below. I'll try to get it answered as quickly as possible. Until next time, trade wisely and take care.